Capital recovery factor. I'm sure many times when we go to a bank for a home loan or a car loan or any other personal loan, what the bank will tell us that your EMI is going to be so much, which means every month you will need to pay this much amount, and if you keep on paying this much amount every month, then at the end of the tenure, which can be 5 years, 7 years, 20 years, your loan amount will become zero. So how does the bank find out this EMI amount? An answer to this question is by using capital recovery factor. So by using capital recovery factor, the bank person is able to tell us as to what is the amount of EMI that we will need to pay every month or every quarter or every 2 month, every half year or every year, depending on the terms and conditions of the loan that we have taken. How do we calculate the capital recovery factor? For calculating capital recovery factor, what we need to do, we need to use a formula. What this formula is? This formula is K in bracket 1 plus K bracket close raised to N divided by 1 plus K raised to N minus 1. This is the formula for calculating capital recovery factor. Interestingly, if you would have noticed, you would realize that the capital recovery factor is inverse of present value investment factor of an annuity, which we discussed just a little while ago. Meaning what? Meaning there is another way of calculating capital recovery factor. And what is that another way of calculating capital recovery factor? It is divide 1 by present value investment factor of an annuity. Divide 1 by present value investment factor of an annuity, and that will give you your capital recovery factor. So as you can understand, capital recovery factor meaning what? Meaning capital that I have invested, it is for the bank. So capital that the bank has invested in us by giving a loan to us, how will they recover that capital? And that is why it is known as capital recovery factor. How do we calculate? Let me repeat it once again. We will calculate it by using the formula which is inverse of capital of present value investment factor of an annuity. And what this formula is for calculating CRF, the formula for calculating CRF is K in bracket 1 plus K bracket close raised to N divided by 1 plus K raised to N minus 1. So when we apply this formula, we get the capital recovery factor or present value investment factor of an annuity. We multiply CRF with the amount of loan that we have taken. Amount of loan that we have taken. And this gives us our EMI. This gives us our EMI. Let's understand again with the help of an illustration as to how to calculate capital recovery factor.